Alrighty, so this week, I didn't trade basically Wednesday to Friday. Had some things going on, so I didn't even look at the charts. But there was a trade I caught at the start of the week, which I've broken down and will actually be posted in trade of the week for all you guys as well, because there was only one win taken. So AU, absolutely nothing. So we opened the week. Where did we open the fucking week? It was here. Okay. I think that's, no, maybe it was the Monday further. This Monday here. Beautiful. So as you can see, we did not have one candle retrace the entire time. So the sell from last week that I took in here that was a break even that I've broken down would still be running. Didn't even retrace. Like we don't even have a 15-minute piece of structure at all. So untradeable. This is untradeable market conditions. If you're looking for it, this is what it looks like. There wasn't even any continuations because we need to pull up on a take of structure of some sort, even around session time. So we just jump down to like session timings themselves. You've got the start of the week here, no pullback around when we trade, so that's shit. No pullback here, can't do anything. This, nothing in here. This had a pullback here, but it didn't react off a point. Nothing here. Retracement start, impossible to catch, impossible. It did react off a daily point, but shit. So I'm not even going to go further into that. EU, there was a break even to start the week, which Dill actually called. I did take, and now we shouldn't have gone break even. So I'll explain why in this. So we had, obviously, we'd come into this top, I think it's a 4 hour point or a daily point, which gave us an inducement into a mitigation, which we know is completing the structure cycle of this leg in price here. So we've basically, main leg in price, we've got all of this internal structure. Off of taking internal structure, you'll get reactions. If it's come to the last supply of that area, you can expect price to now push down and retrace like that. Okay. Especially with having our first break of structure internally here or here, whichever one you like to use. We're at least targeting this low, assuming we're going to go with this momentum. That is the thought on the 4 hour. On the daily, it's the complete opposite. We're actually going the opposite direction. So we're expecting a reaction out of here to come back down here to push up. Okay, we've just taken liquidity, reaction, push up. That's what we're expecting. Coming into the week, if you didn't realize that this was the case, you would have tried to catch buys the entire time, which we did try and catch a buy. You can catch retracements. 1 to 5 in a retracement is perfectly fine. But basically, coming into the week, we had Monday was where the trade was taken. Price had pushed into this hourly point here, pushed up, broken structure. So this is now the point that broke this high. So this point has relevance. You also see that this point broke here. So we've actually already taken a demand to come to our extreme demand of this 15-minute internal range. Yes, we react out of here, but we can expect a reaction out of here to possibly retrace, take maybe this retest liquidity, which I'll explain, which we actually did, and then push down and continue with that bearish momentum until otherwise, until it tells us we're going bullish. Okay. So looking at what price has done, we've pushed into this point, broken 15 minutes to the upside. So that indication there is now we need to hit something to then get sellers in control again. That next point where sellers get in control is this point here or a supply point. Okay. That is the two options there. I'm just letting people in now. Awesome, awesome. I've just let you in now. I'm walking through Euro USD now. Okay. So basically, I walk through AU. There's nothing you'll see in the recording. There's no point me walking back over it. With Euro, we reacted off this daily, basically external supply and started to push down. Broken internal, but we've reacted off our 15-minute point to the upside. So this is telling us that buyers are now in control. We're at a point where buyers get in control. Price pushes up, break structure. I now know that sellers aren't going to get in control unless we react off a supply that means something, or if we take liquidity to continue bearish. Okay, you've got to, when analyzing the market, you've got to really understand that buyers and sellers cannot change control unless they're at points that are valid to do so, or if they've taken liquidity that's valid to do so. So that's why you hold trades and why we should have held this trade through break even. And I'll explain that walking through this anyway. Price obviously pushed down, broke structure, so we can now expect a retracement. Okay, and a point until sellers get in control. Price wanted to then push further into this demand point, which is fine. That price can do that. We don't know how far it's going to push through a demand before it gives a reaction. Price then gave a reaction and broke internal structure again. Beautiful, beautiful, beautiful. With that, price then came and took the liquidity we were targeting for sellers to get in control. So the moment the market then takes this here, we now don't know if it's going to sell off or if it's going to buy up. We have no idea. It's now at a 50-50 point. It's reacting from a valid demand, but it's taken valid buy side liquidity. So we're at a point where it's literally 50-50. We need to wait for confirmation. So what happened? Price came down to the last demand inside demand. and gave us an entry. So for a play price to that entry, looking at this price, I'll explain why the break even was a bad idea, in my opinion. I went break even, won't fucking ever do that again. But I'll explain why. Another rule I have is on Mondays when there's no news, which this was a Monday with no news, we have to understand that the market's going to be slower. So if you're going to take a trade, you have to hold through choppiness. Okay, to me, this is chop. It's still good price action in the direction of bias, but it'll be choppy because there's not a lot of volatility. So Monday with no news, look at the pattern, what it does. Okay, this is what it does. Price came in, gave a minor inducement on our session timing. Perfect, perfect, perfect. Clear manipulation. We've now at a point where buyers are in control. Where do sellers get in control again? They either get in control at the last supply. It's either that or they get in at the last retest liquidity. But what you've got to understand is what's the retest liquidity versus the point. This is an external demand. This is 1 minute retest liquidity. This will just push price into here. So this is where you guys see, and I'm like, oh, this is a smart money trap, just pushing price into the entry. That is what this holds compared to this. So we should have held through that break even and basically until it reacts off a supply point that created the next low, which was here. So we shouldn't have gone break even until it did that. It doesn't even hit the 1 to 5, but this shouldn't have been a break even this early in this trade. Even if understanding it's Monday, you take 1 to 3 or whatever the hell. Okay, so price then pushes up, does what it does. Obviously, it doesn't go 1 to 5. Very, very clean trade. Minor inducement on London Open, taking Asian lows, Asian higher targets. We're in a bullish 15-minute internal range, external demand, sorry, extreme demand. Very, very valid trade. So if you took that, I know Dylan's the one who called that. If you took that, hats off to you. We've just got to walk through why we hold something. Okay. We then know this is the next demand. This is the next extreme supply in this little range. All price does is take a lot of equal highs and then melt. Okay. Very, very straightforward and simple. Once it melts past this point, we then look for points where buyers can get in control again. That would be down here in this area here. Funnily enough, I reckon it reacted perfectly off an area here. If I look, there's a 4-hour imbalance with a point there. This would be the last demand here if we were to mark out the 4-hour point with a nice imbalance. And it actually gives us an inducement there into that point. Okay. All of this is filled. You can mark this entire area. For me, I just don't even bother. It tracked perfectly off the area we expect it to. I'll even look on the daily. You can even go the daily point if you would rather. Okay, but this point is the last point that gave and broke basically this high and this high. So this point has relevance, which is why you get a reaction. Okay, I don't think this will be enough to push it up, but I think it'll be enough to then give a reaction to then start selling off again. Okay, so when price then breaks that low, you've got to understand we are selling and it is creating a new structural and liquidity cycle. So from our external high to our external low, this is now the structural cycle. Okay, we can expect price to build internal liquidity, internal liquidity, internal liquidity. I would say if I was to project what's going to happen, price is going to come up in here and then melt. That is my guess. That's what I'm locking in. Or it'll come and take that high because that's an Asian high. But I would say that this being the new range, it's going to induce this high and sell. Okay, that's my guess. That's before we even look at what's going to happen next week. Okay, looking what happened after that, no trades here. In terms of trying to catch this, GU had a trade, which I'll walk through. There was no entries here. Just simple understanding sellers momentum. Given a retest here, you could try and take a trade off the retest. It didn't retest and break retest and create new structure like we like it to. So no entries. Further melted. Coming into this session, this is the one I forward tested. I didn't trade this day, like I said, but this is one I forward tested. Price came in. I reckon you actually saw this, and you know who I'm talking about when I say you. You saw this as a sell here. This is a very nice sell. You've got break, retest, break, push up into supply. It then gave a 2-leg. You could have entered. It actually gave a minor inducement on the 1 minute. Could have tried to take a trade there, but that is 4 o'clock London in the afternoon. Sorry. I mean, we're all fucking asleep anyway. So, but that is a valid entry to take and look and backtest. Price then pushed down and broke again. So looking at why I took this buy, we're now in this selling range here. Price obviously building liquidity and so on and so forth. I've marked out this supply here that's reacted off of. It's at Asian highs. It's going to build liquidity there as a trap and gives me a target for liquidity, especially when this point didn't actually tag on OANDA or FXM, didn't tag this point. It actually only did on this broker. So this point technically not filled. So if we treat it like that, bang, it's got an unfilled point. It's just created a smart money trap with an internal break. Yes, we are bearish in this range, so this is a risky one to take, which is why I think I entered and went break even soon. That mixed with the news, pretty fucking impossible to take anyway. So I will walk through the confirmations, and this will help you as well, Callum, because I think you asked why I would take this without a minor inducement. So we had this is if we look, supply pushed down to demand. Demand then broke internal without reacting off a supply point. So this is now a valid demand to trade off of. It's a demand area. I haven't gone in and marked out, like there's a 1 minute point here it reacts off of, but I'm not that in tuned with it. And it actually took a retest into the last minute point. But this point holds value, supply to demand, and then broke structure to the upside. Okay, so this demand holds value. And understanding the structure cycle, this demand could be the start of our new retracement. Okay. Yes, it reacted off supply, inducement into mitigation. Funnily enough, you'll see me use that a lot, and then reacted down. So once we've got that, 5 minute equal lows, which is a retest equal low, and 5 minute equal lows, price then does a two leg, technically minor inducement. For me, that's not a confirmation for me for this trade. It's taken the retest, it's in a supply to demand point, and then gave a two leg entry to the upside. I entered off the two leg, came up here, went break even, news then tapped in here and then went. So I got break even on this and forward tested this at the same time. So how I would trade if this wasn't news, I would have held. Okay. Price then melted again. So now we've got our new range. If we jump back onto the 15 minute, we've now reacted off a bullish point, broken to the upside. Like I said, didn't take this trade. Let's walk through how I would have traded these days, acting like I don't know what's going to have happen. Let's try and find an entry that I would have taken. Okay. So we've reacted off a point. We've taken this retest liquidity here. We've come into a point. We've then broken to the upside. So once you break to the upside, we haven't racked off anything to sell. So all we've racked off from is this recent supply that just broke the recent low. This didn't do much. We are at a possibility that this could be the start of our new cycle. Okay. So if we go down to the 1 minute and let's see if I would have taken anything. Awesome. We're coming into the open now. Obviously, don't want to play it too quick. Nothing there. We've pushed into this point. It's valid to start looking. Pushed really deep into it. We've now broken internally. So you can now set this as an aggressive entry. I would be setting off the retest break. If we look on the 5 minute and see if there's a point, it's all the way down here. I imagine you won't get tagged in. I would say this thing's just going to run. That's way too slow. So I'd probably go like a 4 pip stop loss, expecting the retest. Now the retest of this break will come basically anywhere along this line. Okay, so I don't even know if this would tag it in. 4 pip stop loss, don't need to cover the lows. The break is too quick and too high. It's not reacting off anything important now. It hasn't even taken the retest of this break's liquidity, which I would say, if we look at this, very, very small break, I would want to target this. I'm aggressive until it takes this. Okay, very aggressive until it takes that. Price retest, you would have got tagged in, so I would have taken this. I would be in this until it breaks this higher break even. It's gone. I would have caught this trade. So that's basically a very simple entry. And I would say this runs 1 to 5 pretty simply. See what it does. Cool. So they would have 1 to 5. To me, this is a valid entry for a trade. Coming into demand before we've reached a relative supply that makes sense. We've had a clear manipulation on the 1 minute. This is a very, very clear push down, break up, very aggressive entry, but timing, inducement, we're in a demand. We haven't racked off a point that makes sense to keep selling. For me, I would have taken this trade. No, didn't minor induce. You've got to understand what the minor inducement means. So minor inducement is a form of manipulation, okay? Now this, with experience, time, seeing it, backtesting, data collection, all the rest of it, you will understand that you're looking for a manipulation, okay? When I go through the GE trade, that didn't minor induce either, okay? We want manipulation. We've come into the last demand. We've also taken retest in the last demand, which is a tick as for me as manipulation. We've pushed really, really strong up, really strong down, really strong up. Given a break, that is enough for me to enter on timing. Okay. If I get stopped out and it then goes again, then it wants to manipulate again, that's fine. For me, this is a valid entry to take. No, exactly right. You don't necessarily need it, but you've got to still got to understand what your bread and butter is. You don't want to have too many things in your head. For me, that's why I focus on understanding why price is doing something rather than just a checklist. Okay, the checklist comes later for me. You may find you need to do, it depends what type of thinker you are. If you're more of a logical thinker with the markets and you want tick, tick, tick before you enter, then you just treat it like so. For me, I just want to know, I need a clear manipulation. I need to see a change in market. I need to logically understand that sellers can't get involved here, so I'm going to enter. Okay. That mixed with the timing, we're acting off the last 5 minute point, taking 5 minute retest liquidity. Yeah, this is enough for me to take. The confirmations for this entry is weak demand, weak supply. So I need a weak supply in my checklist. This would be a weak supply, or you can call that a smart money trap. That's enough for me to take it. And yeah, push up and go. Okay, once that, I'd imagine you'd hit your 1 to 5 anyway. That's fine. Any other questions on that, let me know. I can even try and break a trade down like that for you if you need. All right. If you don't enter there, you can also understand that once this breaks this high, it's taking retest liquidity. You don't want to be in this anymore. You could then again look for buyers in New York. We'll have a look. So it's now taken retest liquidity, but we've pushed down into this demand here, understanding that this is our new break of structure. We haven't racked off our external supply. We are acting out of a point that's broken structure. So we're still in this internal range until it tells me that that is not the case. Okay. I won't replay this one because it looks like news comes out or it's quite ugly. But you've got breakdown, not in anything yet. Actually, sorry, that's the next day. Here we go. We've got really forced manipulation down, push up, no entry criteria here. This is one you just don't catch unless you've got this one set, which I don't love doing. So no, that's the valid trade there. I think that's quite valid. In terms of the next day, we've got price again. We break up. Beautiful. We haven't, this isn't a retest of anything. No. Oh, it's kind of a retest. It is retesting this break, so this does hold value. It's very 50-50. Once it takes this point here, this is a retest of this break here. This could be a part where sellers get in control. So all you would do is coming into this session, mark out your last point, which is this here. I would cover the low just because it's a bit ugly like that. Coming into the session, what do we get? We get price react off a smart money trap. That's just obviously smart money trap. There's nothing that's an awful point. It's even awful price action. There's no retest of this break. The retest would actually be this, which it doesn't come down and grab. It gives a 2-leg, no entry, nothing there. In terms of selling this, no entry. Nothing in terms of those 2 days, which is why you get sideways price action. But understanding the structure cycle makes sense on why you'd be aggressive here. We've broken to the upside, wrecked off our retest area, which we know a retest area to me is a smart money trap. This is the retest of this break. This to me, this demand didn't take liquidity. We didn't take liquidity for this supply. This is just a retest of break. So we want to take this. Until we take this, buyers are in control. Okay, especially with an internal break of structure. Price pushes all the way down, manipulation, target. You realistically could just target this and just walk away from the screen because there's not a point where sellers can actually get back in control. That makes logical sense. But they can from here. Like it is a possibility. We're not in charge of the market. Just understanding that buyers are in control with this break, reacting from this point versus this point, because this is a retest area. This holds more weight. Okay. Pretty straightforward and simple. So realistically on EU, you should have had break even because it doesn't hit 1 to 5. You've then got this one, which you wouldn't take because of news, which is a 1 to 5, which means you should have got 5R. If I was to trade this week, that's what I would have caught. There would have been no losses in here in terms of trying to take these trades. And trying to take a sell out of this point, let's have a look at it. Like I said, it's still a supply. It just doesn't hold a lot of weight because it's a retest break. And you can, until we break this next low, we've already done it. We've already broken that next low. Yeah. See, taking a trade from here holds less value. It even gives some manipulation. No entry though. Nothing there. I wouldn't look at trading from that spot. To me, very unlikely spot. Okay. You've got to look at retest liquidity. What does it hold? Why is it held? Why has it done what it's done? Do I want to trade from here? No. What has this point done? Did this point break the recent high? Okay, this point holds value. And then you look at those places. Okay, so if we look at this place here, this point broke this high. Okay, this point broke the high over here. So this point is a valid area to look for buyers. Institutions are in drawdown here. And there's been manipulation. What have we taken in this? We've had an inducement into a mitigation. Beautiful. Okay, so they're the 2 trades there. 1 to 5 and those 2 break evens there, or you wouldn't take the news one. Now, in terms of GU, There is a seller court, which I've walked through, which will be in trade of the week, like I said at the start of this video. But let's walk through what happened, okay? You've got to understand and read price action correctly and understand, like I said, when there can be a shift in the market, okay? There's actually got to be a legitimate reason why there can be a shift, okay? There was a shift here. If you look on the 4 hour, we've taken 4 hour equal highs, okay? They hold value. This is the retest of a very small internal break here. I actually say this is a supply to demand that was taken. Um, yeah, supply here. Sorry, demand to supply. We've actually taken a supply point. We've externally taken a supply point. A lot of liquidity. Push down, internal break. Okay. In terms of liquidity that holds more, we've got a 15-minute, this area here that broke this structure. So this does hold value. You can expect a response, but the liquidity we've taken with the break of structure to the downside, this area versus all of the things up here and all the facts it's giving us, more than likely won't hold, but we can try and take the trade anyway. Okay, coming into Monday, if I jump on the 15-minute, we've got price, push up, break internally. Okay, so we can now look for buyers until it reacts off the supply. If we look, we've got break, push up, which is retest, but we've then pushed down, then mitigated, pushed, and retest. So we've got retest liquidity that's closer to. So it'll take that, give a reaction, and then aim for the next one. So until it takes here, we can look to buy. Price pushed up, couldn't get an entry, couldn't get an entry in here. We had a nice inducement into a mitigation of a last point, push up, nothing there either. Pricing reacted here, broke to the downside. Very internal break, and we are a bit of a conflict here. We've got this nice area, which is like a 15-minute point that's not completely filled, so it's still valid to buy up from here. Understanding that we're against momentum, and the more times we don't break up, the less chance we've got. All right. What it does with that is it breaks internal structure here, retest and push. We then get a push up, no mitigation, but a take of retest, a 2-minute 5 leg that breaks structure, push to the downside, reacting off a weak demand. Okay, this demand did not break structure to the upside. It did not have enough juice to break up here. So we know that we're in a bearish 15-minute leg. We've then mitigated and induced into a mitigation here to break structure to the downside. We've got little hints that sellers are in control. There's no need. You don't want to force buyers here, expecting that we're going to retrace. We are in for sellers here. Let's wait for the traders that call it discounted areas. This is at a discounted area. We're at the high of our last internal range. We've had a good retracement. Some will call it. People go back to the fib retracement, more than a 50% retracement. And then we've got bearish lower time frame confirmations. Okay, we've then reacted out of this weak demand, which is a smart money trap of sort, unless it breaks the high. Okay, how do we know if it doesn't break the high? We will know when it doesn't, when it tells us with lower time frame confirmations that sellers are in control. So we push down, get a really clean retest of this internal break. Very, very clean. Draw a line across it. Does it break the line across it? Yes. Okay. Well, this is generated liquidity. Price pushes down, rakes off this demand. Okay. So buyers are in control now until sellers tell us they're in control. We then take retest liquidity, which is a form of buy side liquidity that then gets sellers in control again. We mitigate our last 15-minute point. For you guys, if you're on FXCM, it's actually a nice 10-minute point. Mitigation. What do we get off the mitigation? To me, this was a very clean entry. I was very aggressive on this. We then get a nice, like the EU trade I was walking through before, push up, manipulation, push down. Now, an internal break normally isn't enough to go off of, but like I said, you can. What gave the extra confirmation here was the very, very small internal break, retest of that break, push. So now I've got an inducement into a mitigation of this last supply in our 1 minute. I now have the structure cycle playing on a 1 minute. I've now got an inducement into my last area of supply in reacting out of supply after taking retest liquidity. So I've got an inducement into mitigation, and I'm reacting out of a weak demand point. So I've now got sellers telling me that they're going to be in control from this point, set limit above the point, 3.8. You're going to get reactions all the time to the upside, getting these buyers in control, breaking internal structure, react out of last point. The moment it breaks free of screwing all of those buyers, you get the reaction that you want. Okay. Very, very clean, very, very quick reaction afterwards. Okay. And I could have held this, understanding we're in a bearish range. Okay. So explaining this again, you've got inducement, mitigation of last supply, break. Inducement It depends what area you have. If you have the 1 minute area, I would say it induces and mitigates into the last area. I'm not going to say that. I'm just going to say it induces into that point and gives a break of structure to the downside. It's telling me that sellers in control. Okay, so inducement into mitigation is a strong tell that we've had that shift in the market, obviously with the lower time frame confirmations. This was just an inducement of retest liquidity, break to the downside, induce mitigation, strong tell that we could have sellers in control, break of structure, inducement into mitigation of my last point, which is a 1 minute point, sell off. Thanks for coming. Okay, this is very, very clean, simple price action. Okay, I'm not expecting buys. I haven't got my buyer's goggles on. I'm reading price action to the downside. Okay, what does price then do? It creates a structural cycle, high, low, internal liquidity, push up to this high here. Like I said, I wasn't trading at this time, but let's see if I would have caught a sell. Let's see what it does. We've come into our time window, still haven't tapped this supply. What's happened? We've had our break of structure to the downside. So we've had our pre-supply manipulation. So it's gotten in early sellers. I'm happy to look here. This is a form of manipulation. Look at the reaction we've got again. Really, really strong reaction. I would say that this entire area is actually a form of supply, a high time frame supply. We jump and look at the 30-minute. Yep. So you've got this entire point here. This is a point of supply. Okay, it's not completely filled, and it's why I don't wait for a minor inducement inside a point every time, because sometimes it's already in the point when a minor induces previously. Okay, and you've just got to look at that, view it on the higher time frames, and have a look. We've got an inducement into a mitigation. We've had that manipulation, which is beautiful, and we'll see if we can get the reaction we want. News came out, a bit of a bitch. It's giving a 2 leg. Realistically, you can set it now if you wanted. I don't know if it comes back up. Let's fucking have a little gander, eh? I don't know if I'd set this in the live market. Probably wouldn't with what's going on. 6.6, 2 leg to the downside, get tapped in, and then melts. So that's the entry there. I think that's pretty straightforward and easy. Let me know if that doesn't make sense. I think that's like I said, pretty straightforward and easy. We're at the extreme, understanding we're at the extreme in a bearish range. We're actually out of nothing bullish. You just target the low. I don't know if it goes there. Imagine it melts the entire way. Like that. Very, very simple entry. What's that? 1 to 8. You take your 1 to 5, that's fine. Then you take your 1 to 5. Right there. Okay. But this point holds so much weight in being aggressive. We're at our extreme point of our new 15-minute range. We've induced internal liquidity into a mitigation. The manipulation has happened at our high volatile area and time. Manipulation, we've had an inducement into a mitigation. We've had an inducement into mitigation on the 1 minute and 2 leg. Okay, the news skewed that, but it's still a valid entry. And I would have taken that in the live market. So hopefully that entry makes sense. Okay. What do we then get? Could you walk through how the fuck that achieved 15-minute range? Sure. So what do we have? 15-minute break of structure, right? This then pushes down. So this is my 15-minute range. You can have this one. Like I said, this is why I don't work with big ranges. This is why I don't focus on them, because by the time it gets up there, too fucking late and it skews you. Okay. This is how you view the market. Me, smaller ranges on the 15-minute or better. 15-minute break. Push to the downside, react out of a weak demand. This demand area holds value, but we're in the very, very bottom portion of it. Yes, it's an inducement into a mitigation. It could go bullish. We need to understand that. Break to the internally, but it didn't break structure. It didn't actually break structure. It's just broken internal structure. We've then had inducement into mitigation of this last supply area. If we look on the 15-minute, you need to understand that supply points hold the value. If we look, we have a 15-minute candle. I think it's a 30-minute candle, which is the last supply here. So we've got this candle here was the last supply candle of this move, or you have this one here, which supplied the move. Okay. That's how I mark mine out. Okay. I don't want to go on lower time frames and find individual points. Okay. This is a supply area of my last 15-minute range. We then had price build up, like we know with our structure cycle, internal ranges. It's mitigated and taken mitigation, push, pull up. That's my retest, push down. 15-minute range, retest. It's taken retest, broken structure internally. This demand doesn't hold much value because it didn't break this high. Okay, so you can expect that if we get a reaction out of here, all that's telling us is it's now coming up to take more liquidity to then push down further. because this wasn't enough to break through this low. Okay. What then happens? We take internal structure. We don't mitigate our last point. We mitigate the last 30-minute point, but there's still an imbalance there. Okay. So you can mark your 30-minute point out. Like I said, you can mark and just have those bigger time frame ones. So you've got inducement into mitigation, push down. We now know that price can push further into these points. So technically my 15-minute range is still here to here. This is my extreme, but we know with the structure cycle and liquidity cycle, we have internal structure. Okay, so we've got supply point, supply point, supply point. Okay, the further up you go, the more that supply holds weight because it's broken through more structure. Plus, you've got to take more liquidity to get into it. Just because we break internal does not mean we're bullish. Okay, we're not reacting out of anywhere. We're pushing up, we're breaking internal. All it's doing is coming to grab liquidity to fill institutions of one of our points and then push down. Does that make sense? So this is my 15-minute range. That there. Okay. So now technically, this is my 15-minute range. Okay. This is why it's important you follow the inducements and liquidity and mitigations. Understand that any point that breaks a low holds value as a supply, but it needs to take liquidity. Okay. So this took liquidity. This is a supply. So we've actually had an inducement into a mitigation of our last extreme of this supply and push down. Okay. And if you want to read further into this, it does it every single time. Inducement, mitigation, inducement, mitigation. Okay. Look, no trades here. No inducements into mitigations. Inducement, mitigation. This outlook on the market is the strongest when you get this price action. This is why this choppy sideways price action, side like this, it's so fucking good to trade because you can catch this. You've got a 15-minute inducement. It's a form of it. You've then got this, which is a form of a 15-minute inducement. You've got this, which is a high value trade going with momentum. You can then take this. You can then take this. You can take this. You can take this. You can take this. These are all valid trades. This is what you've got to look into. Okay. Inducements into mitigation, new structure. Going with high time frame momentum. We haven't racked out of a point to buy, so we've got to keep that in our minds. Okay. Price pushes down here. There's no trade here. That's awful. I wouldn't be surprised if that was news or something. Continues to push down, building up liquidity. We haven't taken anything to create new structure, but this is where my break of structures come in. This is a supply point. This is a supply point that broke here. I mean, this was a little pullback to break this, but this was more of a retest. So if we even look at structure on the next level, we've got internal break, retest, takes the retest, use that to push lower. So it takes retest liquidity or it induces into mitigations to move. Like that is literally how structure moves. This is why you don't need heaps of things on your chart. You just need lines, these little lines, okay? Take liquidity, new range, okay? This didn't take liquidity to take new range. It took a little bit, so it mitigated, pushed down. This technically broke this low. This is a weak supply. It's the last one. Didn't take a lot of liquidity. It did take little bits of liquidity to actually mitigate this supply here. This supply here and push. So it holds value, but now there's more liquidity at this point. We've now got a new 15-minute range. So we can expect price to do that. Okay. Is there any questions before I walk into what I want to see next week? Okay, because that's obviously the next step. Nothing? Beautiful. Fucking sweet as. Alrighty. Hopefully that all makes sense and I'm not talking too fast or anything fucking off the charts. Okay. Now, in terms of what I want to see next week, okay? First thing we do is mark out all of our points, mitigated, not mitigated, that we want to see filled, okay? So if we just walk through, I can delete these. Hopefully, if you guys want me to go through these trades, let me know and I'll break them down as a trade recap. And I can walk through them so you've got them on hand. Just let me know, okay? We can fuck all this internal shit off because we don't need it anymore. New structure has been created. We know where the breaks of structures are. Let's just focus on that, okay? That can go. That's retest that's taken that to indicate that. Beautiful. That can go. That's fine. Awesome. So this is now my 15-minute range. If you want to have this as your 15-minute range, that's fine. Price can come all the way back up here to continue. We understand that. But let's focus on this 15-minute range. If we jump on the 4-hour, where can price actually react off of now? Well, we know when you retest breaks, you get reactions. We've now retested this break. So based on other things that we don't have in our analysis, this could be just a point of retracement. It's done a sufficient retracement now. Price may just push itself back up to keep going selling. Okay. I wouldn't look for buys this week. That's not where price will go. Long term this week, I'm expecting price to come down to this level here. This is the last area that took liquidity. We haven't got any other high time frame liquidity to target other than this demand point here. Jumping on the hourly, we've got not a lot here, not a lot to work with in terms of break here. This is my retest of this break. So I'm expecting price to possibly target this retest here. Okay. Now this is only an internal break, but it holds some weight. So if we push up here, this external point to sell from holds a lot of value. Break, retest, beautiful. Okay, so this point itself holds a lot of weight to come and take. If, for example, on a Wednesday, because it may take that many days, on New York session, we get a inducement of this 15-minute structure, our medium inducement, I will be aggressive and be looking for a trade. Manipulation, enter. In terms of anything else, this is still the retest of that, but it's just not a huge retest. So you may actually find the price does this like that, and then this is the retest of this. That's what you may find. So you've got to try and picture that high time frame into your head as well.
Brad, can I just ask something,
Sure.
please? That point you just marked before as retest. Yeah, that one. No, the one lower down, I think.
This one.
I think go back on the hourly, sorry.
Mhm. Yeah, you're right.
Um,
Are you saying with the
yeah.
retest of this break?
No, the go up where you've got the little dash line. Yeah, that one, that one.
Yeah.
That's also a valid POI as well as retest.
Yes.
And I find that a lot, and I kind of don't know how to deal with that situation. I guess you kind of just treat it as both.
You treat it as both. Exactly right. So we know you've got to understand that all these points hold value. Just like, for example, this point was a retest of here. Okay, so it could have come and take this. Okay, but we don't know.
Yeah,
So it's a supply and it's a retest. It's just when you have it as a retest and it doesn't give you an immediate response like this, you can expect that it's more than likely not going to hold. And by an
yeah,
immediate response, I mean it immediately fills itself and moves on. Good thing about this one is that's exactly what it did. Okay, so if we actually read into this further, yes, this is a higher time frame retest, but what do we have straight after? We have a break of structure. We then have a retest of that break of structure and a supply area. So what I'm more than likely going to see happen here is price will push into this point, take the 15-minute retest, push down to take that retest again and go. So you can try and catch this as a continuation, or you can catch this as a continuation.
right. So you can catch both the
Yes. Yeah.
POI trade and the retest take.
Yes. You may find that because this point holds value and it's already got retest in it, it may not come take it now. It may come
Yeah,
take it later. This could be an hourly high that we come and take in 3 weeks' time once we've broken this low here and we need more liquidity to go lower. It'll come grab this to continue.
yeah. No, I just
Okay.
find that throws me off a bit.
No, I get that 100%. You've got to read into the minor details. So understand that
Yeah,
it is a high time frame point, and if we take it, we can expect a big response. So if we take this point, fuck, this thing's going to go.
yeah,
Okay. We can
yeah,
also understand that, yes, we can take that, but we may be able to take a sell here, catch our 1 to 5, price will push up, and then we'll catch a 1 to 10.
yeah,
Or what will happen, for an example, is price will create its structural liquidity cycle. It'll come take this, create a new low. You've now got a build up of liquidity underneath the high time frame retest point, which creates more structure cycle, which will come take like this and do this, which would
yeah.
be ideal
So
for
many
us.
options.
Yes, ideally we want it to take as many and give as many reactions as possible. The price action we hate is this shit.
Yeah,
You can't have a field day with this because you've got to wait, and you've got to either catch the move here and buy it all the way up, or you don't catch anything. Whereas, like just going over GU last week, there was two nice 1 to 5s in the same spot. So you had 1 to 5, 1 to 5. It's literally in the same spot. That's what you want. So
yeah,
when price was on the 4 hourly, when price was in here at the start of the year, I think this is the start of the year. Yeah, in this area here,
yeah. Hated it.
it was well. Now you would love it. You would fucking
Yeah, maybe.
profit because what you would see is, okay, cool, liquidity, yeah, I'd catch that sell. Cool, we've taken this is internal structure. Cool, take liquidity, I'll take this buy. Yeah, I'll take this sell. Can keep selling, can keep selling. Oh, we've taken liquidity, buy. Oh, take this, sell. Like you would try and catch all of these moves. And you can ping pong price.
You would.
You would as well. You'd be very surprised. This is the confusing part. This is why everybody has found it so shit. No one's used to this.
Yeah, that was horrible.
Because the last time this happened, funnily enough, was last year. What happened in July?
Yeah,
Look at it. It's
yeah,
the same shit. This is the same shit. So August is going to be awful.
great.
It always is. People take August off when they trade because it's literally this. So expect to take less. But you've also got to be able to validate in your head that a point can be a valid point and a valid point of retest.
Yeah, that was my dilemma.
The point
Okay.
of it's more a valid point of retest if it doesn't do this.
Yeah, okay.
Okay, so if you look at this one and this one in common, it gave a reaction straight away and broke again and created a retest. This one did the
Right.
same. That is not a coincidence because it's creating new
Okay.
structure. Remember, we're just looking for new ranges. We want price to tell us when a new range occurs. Well, if price had just done this, one, it's almost like it's a smart money trap. Okay, catch you, brother. Thanks for joining. Um, it's almost like this is a smart money trap and a retest, so it holds more value. Whereas now we've had price push off, create structure, mitigate itself, break to the downside. Price is telling us at this point, yeah, cool, this is a valid point. We're going to use this for institutions to get involved. Okay.
Right, okay. That makes sense.
So this one is both.
Yeah.
Okay. So when it gets there, you wait for that manipulation. If you catch it, if you don't, then whatever and so forth. Price may just do this. And you'll sit there and wait and be like, okay, well, that was fucking shit. But now we know this, we can try and buy up to it when it gives us lower time frame, 15-minute breaks, for example.
Okay, cool. Thank you.
No worries. Unfortunately, we don't often see a valid entry in both spots that takes our stop loss. No, it'll just blow through the PI merely, for example, take the retest. Then yes, no, exactly right. Very, very exactly right. You will very rarely see a trade in both. You won't see a trade in here and in here. Okay. It'll only do that when it does this. When it creates structure, it doesn't push too far away, still a valid point, it'll fill more of the point. That's where it'll do it. But when price creates retest inside of a point, fuck. It's good words to my fucking soul. Okay. Just think inducement into mitigation. I say it 400 times a week. It holds so much value. That's what you've got to get in your head. If you can keep inducement into mitigation in your head, you will start seeing things a lot clearer. Okay. So in terms of where we're heading, we've had price obviously push up and break nothing. Price has now pushed down and done a two leg. Okay. So we know that two leg is a form of move to the upside. Get that on a t-shirt. I've got time now, so I'll create one. So we've had two breaks to the upside. So we know as a minimum, this is a weak supply. Yes, it did break this structure. It's just very, very weak. We are heading there intraday. Okay. So what I would be looking for coming into this week, we've had obviously break, retest, break. We've taken the retest and we've pushed up. I would be looking for buys until price breaks through this point. Okay. In terms of a point to buy from, um, this took liquidity and mitigated, so I would just go from the last 10-minute point, which is quite clean. This area is a supply. If we jump on a demand, sorry, if we jump on the 30-minute, that point is technically that's a clean 15-minute point. I don't think it's a retest of an internal break. No, we haven't actually retested the internal break yet. If you have, that is, yeah, it hasn't, so that's fine. Took all the retests for that. If we jump down to the 5-minute, that's technically the retest. If you come lower than here, it gets a bit iffy. You don't really want to be involved that far down. It's all wicks, okay? When it's all wicks like that, you have less chance. It could induce Nah, it's mitigated. So if we just read price, you've got break, retest, push, push up. So this point holds a lot of value. Okay, a lot of value, especially taking already the internal retest of all of this garbage. Okay, so this is a very, very clean point to buy from. If we can get price step in here, even in an Asian session on a Monday, it's worth looking for a buy. Okay. If we were bullish and timeframes were bullish, I would be telling you to set this now. Okay, like that's how nice and clean this area is. Okay, so looking for buyers is great. We haven't racked off a place the sellers can get involved yet. We've also broken down, broken up. We are retesting this break, which also makes sense. We've broken internally, which has now created a weak supply. So if we react out of here for buyers and it gives us an entry model, take it. Weak supply, target, take profit at this point. Lots of liquidity here. You should get a reaction out of here where we can actually look for continuation buys. So unless price breaks this low, so if price breaks this low, what I'm saying is completely off the table anyway, and it can do that. But in terms of what I'm looking for next week is this, push up here, catch a continuation buy here to continue up to here to then look for sells. Okay, where you should get a reaction out of this point, taking the retest already, understanding that this is our extreme supply here, okay, of this little range. And this holds even more value as a point. So I'm actually going to remove the retest from that because you've got, from a high time frame perspective, we've got inducement, mitigation, push, inducement, mitigation, push. So this point holds heaps of value because it keeps reacting out of here and institutions are in drawdown and grabbing liquidity into it all the time, okay? An IFC holds more weight when this happens. Okay, so that's, I'm actually bullish into this week, okay, on GU. I'm looking for price to push up. Okay, if it breaks this low, what will happen if we break this low? I'll explain. Break the low. We've now got internal weak structure. This point holds value. This point holds value. We'll look to sell from here, here, and here still. So the same still applies. We may just be able to get cheeky and catch a little buy up to a sell. Okay, hopefully that makes sense. EU. Alrighty then. So EU, as we know, which actually correlates with what's going on with GU, has reacted out of a solid demand point, which holds a nice amount of value. We can remove all this fucking shit. Yeah, I took that. That's fine. Goodbye, 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 goodbye. Alrighty. In terms of EU, inducement into mitigation, funnily enough, saying that again, break of structure. Inducement into mitigation, break of structure. So this is beautiful price action. Inducement into mitigation, no break of structure. Okay. First time we've got a change. Beautiful. This is also the retest of this break. Nope, it's not even up to that point yet. Okay. In terms of understanding where price is going to go, this is where we will get our retracement. This break here, we haven't had a retest. This break here, no retest. This point took liquidity, so this point does hold value as an area to sell from, potentially just sell. We also understand that this point holds a lot of value because this took a retest and broke heaps of lows, okay? So this ideally is a high point that we want to try and sell from. Yes, it's Asian highs, makes it a bit disgusting just because we're built different in our head looking at towards Asian session. Now, in terms of buying this thing, tracking out of a very weak supply, very, very weak supply. Didn't even break internal. This point itself is very weak. Just because that's the retest of that. So it did grab the retest break, but that didn't break the low. Did grab that retest, but like I said, hasn't broken the low. So sells do make sense because it's taken this liquidity here. It does hold value. You've got this point here, which is a demand to supply. Just the demand didn't hold much value. Demand here, supply holds value to sell from. In terms of buying this up, I kind of, well, that's just a bit too fucking clean, isn't it? Inducement into mitigation. You've got this break here, retest, break. Okay, yeah. So I'm looking for an inducement here to buy, basically. This point's all filled. Relatively nice price action. I don't think there's any need to look further down than that. It may push lower than this and induce those lows, which is very, very unlikely. So lining up with GU, funnily enough, that's how it works, is buys, sells here, or sells here, or sells here. Okay, very straightforward and simple. It's actually very clean at the moment. There's no need for this thing. The only reason this thing may sell off and just go from where it is because of the liquidity it's taken, but it doesn't hold as much weight as the point it's reacting from. And it's built a very nice internal range here with heaps of points and liquidity above. So looking for buys up to those sells. If that makes sense. AU. That is the retest of all of that. Come into a 4 hourly point. Bit of news this week. All right, cool. I'll have a look in a sec. It's taken that point. I think it came into a daily. Is it still in the daily point? Yeah. Reading this is a bit more difficult. It's due for a retracement. It's technically already taken retest. I never work off the daily point, but I would actually work off his daily point. Fucking AU, man. There's just not a lot of places to look for sell. So once this thing goes, it's going to go. Hmm, two leg didn't take a lot of liquidity, did take some. This didn't break that high, so you've kind of got break, retest of break, push up. It's already taken that. Ideally, it may react off a point inside Asian range. And if anything, I actually see this coming all the way down to the bottom, which is already mitigated. Yeah, I want to buy AU, but there's just no place to. Okay, so it makes sense to buy. I'm going to mark out this area down the bottom here, just because you've got break. Like you've got an internal situation going on here, so I'm open to do this, basically. Okay, I won't be selling anymore just because catching a sell now is impossible. It doesn't take enough liquidity to do that. Buys make sense from there. Okay. Awesome. In terms of news this week, Monday, no news Monday, so expect it to be slow. Tuesday, New York's off the charts. Oh, they shouldn't really do anything. Pretty good day. The news isn't that bad. Wednesday's fucking cooked. Yeah, Wednesday's a no-go. Thursday's a no-go. Yeah, Thursday's a no-go. And Friday night's a no-go. Okay. So basically Monday, Tuesday, Wednesday Arvo. Realistically, just Monday and Tuesday for these moves. So we can catch the buys and maybe news can push us up. Okay. So that's what I'm looking for now is for those buyers to catch the news up. If it keeps selling, I don't think we'll catch it, ideally. But we will see. All righty. Any questions before I call it there? Not we're ready to go and we'll have a good week. Hi Bradley. Hi Josh. No, thank you, thank you. I will be back at it tomorrow. That is all perfect. Awesome. All right. Thank you all for staying in this long. I'll upload the video recording as well, and we will go from there. All right. Enjoy the rest of your night, and yeah, fucking let's get it.